Hey, it's Stephen Ho with the Mr. Sauga Real Estate team, and today I am chatting with Jeffrey Ho at Elite Lending. How you doing?
Good, Steven. How are you doing?
I'm very good. There's been that increase of 1% yesterday from the Bank of Canada. That's kind of shocking to a lot of people, but we kind of saw this coming. And this is our fourth rate hike of the year. So could you give us a quick summary of kind of what happened this year?
Yeah, it's crazy. Everybody was actually expecting a 0.75% increase following the US, but yesterday with that news, 1 whole percent increase. I mean, it's mainly due to a few factors. It's mainly due to the global economy, the war in Ukraine, the supply disruption around the world, the housing prices, right? So the government really wants to control inflation by increasing interest rates. I mean, at the beginning of the year, we're looking at a prime rate of 2.45%. And after the rate hike of the last 6 months, we're currently sitting at 4.7% prime rate.
So it's almost doubled in half a year or
Yeah,
so.
that's a 2.25% increase when prime rate was 2.45. So it's almost double. That's right.
So that's kind of quite the change from what we've been used to over the last few years. And some people might be panicking that have bought during the peak versus people that are in the market now. Um, Doing some of the math, it actually seems like you might be paying more now than if you were previously, even though prices are down. Um, for $1 million mortgage, for example, if they bought in the peak, how much would that look like versus, if that same property is dropped 200 grand, let's say, and today's interest rates, how are the payments like for buyers right now?
So if you're looking back at 6 months ago when prices were a lot higher than today, given a $1 million mortgage at 2.45% interest rates, we're looking at about $4,400 in payments. And today, if let's say the market dropped 20% and you have a mortgage of $800,000 now compared to a million, given today's interest rate at 4.7%, your monthly payment is approximately 4,500. So you're actually paying a little bit more today compared to 6 months ago.
That 1% increase is actually equivalent to $55 per 100,000 in mortgage. So if you're borrowing $1 million, that is you're paying $550
Your monthly
more.
payment is 550 more a month.
more.
Yeah, that's right.
So and in terms of mortgage, that $550 could be going towards your principal or your mortgage, but now you're paying more to the bank instead.
Mm.
So
The bank makes all that money.
the bank makes all the money, and the question is like, would you rather pay the market and pay a higher price, or would you rather pay the bank with higher interest rates? Going into the future, do you see any more rate hikes coming? And if there are, maybe buyers can kind of calculate, hey, maybe it's actually a better time to get into the market now, even if prices drop, because if interest rates go up more, they're actually going to end up paying more.
So if you look at the history of the last 30 years, every single time there's a rate hike, the rate hike cycle actually lasts only 2 to 3 years. And every time there's a rate hike, it would only go up by 2.5% approximately. So right now, our rate hike cycle has lasted about 7 months, and it's been an increase of 2.25% so far. So if you look at the history to predict the future, even if there's a rate hike, I don't think there will be a big jump. So if you ask me if this is a good time to buy right now, given the rates, not the rate, given the prices have dropped, I think this is a perfect opportunity to buy right now.
I think a lot of buyers are waiting for the interest rates to stabilize before coming back into the market. That's when all that competition is going to come back, and we'll probably see the multiple offers again, and the prices will come back up again, because I think there's a lot more demand than we actually predict or estimate. And that's when the bidding wars start coming back. It's just during a change of the market right now, a lot of buyers are conservative and they want to kind of see what's going on, so they've relegated down to the sidelines to wait and see. And right now, considering how the market is moving, I think this is also a great opportunity, because if you wanted to get that house or that neighborhood or that school zone that maybe you didn't think you could have got because there's so much demand for that neighborhood, during this quiet kind of window, there's an opportunity to get into those properties.
Yeah, 100%. Just like Warren Buffett said, be greedy when people are fearful and be fearful when people are greedy.
Absolutely.
Everybody is scared right now. This is the time to buy.
Exactly. So if anyone has any questions about real estate or mortgages, feel free to reach all of either of us with our contacts information below.